Welcome to this week's review. It's weekly review number 42, and it is a month-end review at the end of January. Um, Argue a really great start to the year. We'll get into January's numbers in a bit. One trade taken this week, that's on USDJPY. It was a short position. It was a winner. If you're following it, if you follow me on Instagram, then you know that I was kind of documenting that over the week and how I was managing that position. And so make sure you follow me there too if you haven't followed me. It's Sam_Vega. And it's also, I guess, 1 month of the Daily Nugget, which is cool. We'll chat a bit about, I guess, some key takeaways and stuff from that as we get into the monthly review. But yes, one trade taken, USDJPY short, it met the plan. It was a low risk position, and that closed out for partial profit. A bit of mismanagement on that position. Should have been trailing the stops a bit more aggressively because I think the max floating profit for the position was just over $2,000. And I ended up closing this out at $991 less $200 swap fees, which is a bit high and ridiculous in my opinion. But essentially gave back half of what was floating at the maximum, which just tells me that the position of my trading stop was just a bit too conservative. And I should have been a bit more aggressive on that, given that price was also very close to my take profit when it did reverse. And so I think should have used a bit more discretion there to trail those stops a bit more aggressively. But closed in profit nonetheless. And so up about $800 for the week. What did I learn this week? Learned that it's okay to take a step back, I guess, when you're not in the right headspace to execute positions. I looked at that in hindsight and thought that I made a good decision because Monday I actually took out the markets. Just didn't feel, given how busy I was and how hectic the day was, that I was in the right frame of mind to be executing positions. I just thought it would lead to unnecessary positions being executed and just rushing into trades. In hindsight, the market developed a bit more and I was able to become, I think, a lot clearer and confident in certain positions that I was looking at. And so thought that was a really good decision in hindsight. What else did I learn? I learned that, and this is a really interesting one, is that I look at every trade that's developing in line with my plan as an opportunity to pass the challenge. And essentially I'm trading with expectations. Or fear of not achieving my goals within a predefined time frame, which is why I have these expectations. And the expectation that I have may be manifesting itself in the desire to capture as much profit as possible in one move. Essentially having FOMO that, if I don't squeeze every pip out of a setup, it will hinder me from reaching my goals. And I think it's exactly this that has led to that large disconnect between what I'm targeting on a position. Because if you've been following the Daily Nugget, you'd know for the two setups that I've reviewed, the optimal alignment and the sniper entry, both of those had a really large disconnect between what I targeted on the position and what I actually ended up realizing. And I think that's part and parcel due to this, in that there will always exist, like the high time frame targets will always exist on any setup. And it's fine to have those, but I think I'm learning or understanding that that doesn't happen in one impulsive move, at least not all the time. When it does, cool, you're going to get even more out of the trade than you initially anticipated. But from some initial trade management workings and testing that I'm doing, that that's showing that over a larger sample size, more conservative entries, or not entries, but more conservative profit-taking targets or areas are fulfilled within, a day or a week. Um, and that would lead to better outcomes in the long run, as opposed to setting longer term profit targets, which do ultimately end up being reached, but the time it takes us to reach those levels isn't maybe as short as I initially anticipate. And so I'll enter really good trades, but because of my management style and the way, I take risk off the table and trail a stop, that's leading to price stopping me out before it eventually goes to these high time frame targets, because price doesn't get to an area in one move all the time, especially high time frame areas. It trades in sequences or series of impulses and corrections. And so it's more, should I be setting my take profit areas in line with the shorter, more near-term impulse targets, so that it complements the way I manage a trade. Otherwise, I may find that I have to maybe leave my exposure open for longer to avoid getting stopped out when the market does retrace deeper. But I think that would have too many implications on, the number of trades I can take in a week, and, what my total exposure will be at any given moment. And I think it will lead to more missed opportunities than perhaps looking at reducing the potential target for each position. So I'm keen to see how that kind of plays out. And what that would look like on a typical trade. For example, this pound JP, not pound JPY, Swiss franc JPY, and I'm looking for this to trade higher before potentially coming lower. But my bias is bullish heading into the week for longer term short bias. But in looking at the trades that I'll be looking at taking earlier in the week, I'm waiting for price to correct down into this key indicator area before we then continue higher into the higher time frame order block. But instead of now, when I do get an entry opportunity, setting this to these high time frame targets, let's say we're targeting the liquidity. Obviously, we're looking at price to get into these key indicator areas, and we know that there's liquidity resting above these highs at the base of that key indicator area. So there's a high chance of that being mitigated or reached. A 1:7 R looks really good on paper, but being mindful that this may not happen all at once. We may get to these equal highs, and then price decides to return and, come back all the way to the break-even point before we then trade back higher in line with, a more matured correction on the way up before the impulsive wave comes back in. And so would it not then work out or be more favorable to target the shorter term equal high from this 1 hour range, which is still a 1:4, and then knowing that, we're going to get that and we're going to lock it in before price then corrects, and then we could get another entry and take that up for another 1:3 or 1:4, instead of ultimately closing out with, a 1:2 or potentially even a break even if price doesn't get to these extended targets in one move. And so I think that's going to be super interesting to see, and a big tweak coming out of this current set of observations and insights. And so heading into what the most important thing I need to work on improving this week, I think that's lowering my targeted R multiple in each position taken, and using 15-minute or 1 hour structure like I just showed you, and aiming for approximately that minimum 1:3 risk to reward. What the most important thing I should continue doing this week, I think that's being transparent with the setups that I have on watch for the week or day, and keeping you guys, updated on those live positions, and how they're doing. And so Yeah, this is that loaded. That's the Alpha Capital account metrics, which I'll just sign in quickly to show you guys where we are with that. You can see if you've been following this week on week, current balance is up to 97,681. So that's just shy of just over 2.3 percent drawdown from that starting balance of $100,000. So ended the month up for sure, and kind of just coming to the monthly performance. January 1st, January 31st, we are up 4.9 R. If you look at it from an R multiple perspective, from a dollar perspective, about $1,019 profit for the month. It's 11 trades taken on this for the month. About 5 wins. Look at the report. 6 wins, 5 losses, a win ratio of about 50%. You guys saw that net R multiple and net dollar value that we generated. And that on the starting balance for the month is a return of about 1.06% for the month of January. Again, average planned R multiple about 4.61, average realized about 0.5 R. So it's going to be interesting to see if we can narrow the gap between that over February, if we lower our expectations a bit. The largest profitable day versus the largest losing day. That largest profitable day slightly less than the largest losing day. Still in line with the plan, but I think this shows what happens at the extent of, the controls in my plan, because I allow for, I think, 3 consecutive losses as my maximum allowed loss for that particular day or trading session. And if that is something that continues to eat into the return, then I may have to look at adjusting that. But I think that is a consequence of, taking a few low quality positions over the course of this month. And so filtering out those low quality setups is going to be quite important going into February. But I think a great start to the month. We've started the month in profit, and I think we can only build from here. I think a large part of this has to do with the daily nugget and just being very aware of what the gaps are in my plan, and using that platform to hold myself accountable to implementing the changes needed to improve over time. And so thank you guys for supporting this channel, supporting the Daily Nugget. All the comments that I've been getting and the support that I've been getting really doesn't go unnoticed. And I can see it in my trading. I can feel it in my flow. I think that's the biggest takeaway from this month, is that staying in flow with the market and being proactive and acting quickly on the information that your results or your data communicate to you is really important in improving as a trader, and improving quickly as a trader, or at least as quickly as possible in a sustainable way. And I think I'm just really grateful for how sharing, these daily nuggets and these daily insights is contributing to the growth that I'm seeing in my own results. So that is the weekly review. We head into February. very optimistic. One thing, a big intention for February is recovering a large portion of this drawdown and closing the month in profit on the current phase two challenge. I think it's very possible and highly probable that I can pass phase two within February. And although I'm trying to trade with less expectation, I'm quite confident that if I just follow the plan and take every trade according to the plan, filtering out lower quality setups, being more conservative with my R multiples that I'm targeting, that we will definitely be funded, if not by the end of February, by the end of this quarter. And I want you guys to hold me accountable to that. So remember, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.